Hey, you guys. Hey, how's it going? Happy Monday. Thank you for joining me today. If this is your first time joining me, my name is Andrea Wilson. I'm the broker and owner over at Brick House Realty. Super excited. I woke up today a little more refreshed. I was just thinking we're headed into fourth quarter. We're a little over a week left, about 10 days or so, 10, 11 days before we hit fourth quarter. Fourth quarter as a real estate agent, um, it can be hit or miss because for the last couple of years, we've seen December kind of do really, really well. And then other times it just kind of drops off. No one wants to make any moves in terms of real estate. So today I am talking about. Uh-oh, sorry. Sorry about that, guys. But I am going to be talking about a common type of loan that a lot of buyers use in the marketplace. And so you may start to feel a little rejection. So I want to share that information with you guys. So sorry, I just want to share this on all of my pages. Sorry, I don't have an assistant to do this for me. So I have to take care of this myself. Give me 1 second here. So the type of loan is a FHA loan. If you're not familiar with the FHA loan, it is a government backed loan. It's very, very, very common in the marketplace. Um, a lot of my buyers, they use the FHA loan. All right, I'm good to go now. Sorry about that. So a lot of my clients use a FHA loan because it is a first-time home buyer product. It offers a lower down payment percentage. So you're like, well, why wouldn't people want to accept a FHA loan buyer? Well, we're going to get into that. Right or wrong, however you feel about it, that's what's happening in the marketplace. So we're going to talk about how you can position yourself to have the upper hand in these types of transactions. So, right? So a FHA loan is a government-backed loan, and what happens is if you're a buyer of that loan, your middle per FHA guidelines, your score needs to be at least a 580. But really, in reality, lenders are going to want to see you at about 620 credit score. So 580 is what the guidelines say, but realistically, it's about 620. If you were to get a loan approved at that 580 price point, typically 580 credit score, typically they're going to ask for a higher down payment, 10-20% down, in order to have that little lower score. So you have to have more skin in the game in terms of cash available to purchase a home with that lower credit score. So FHA loan, I think it's a great product because it does allow people with a lower credit score to be able to purchase a home. Purchasing a home, the mortgage payment is typically going to be a lot lower than it would be if you were to rent a property. So it's saving money to a lot of homeowners just because otherwise they would be renting and not being able to save any type of money because the rents are so high on there. So as a FHA loan, so we're talking about people that are first-time home buyers and usually have a little bit lower score. So sometimes those loans could fall apart, or those deals could fall apart just because the lower the score typically means that the more risk there is with that buyer, and for whatever reason the deal can fall apart. Doesn't mean that it happens often. I would say I don't really have, usually, if they get the pre approval, at least the lenders that I work with, then it's a pretty strong chance that they're going to close. At least meaning it's not because of credit issues. Other things may come up that may prevent the deal from closing. So it allows for a lower down payment. So with the lower down payment, that's definitely helpful for families because if I only had to put 3.5% down, that's more money that you can put in your savings account or when you're moving, you have some money when you move into the property, if you want to buy furniture or whatever it is you want to do with that cash, or just have some reserves available to you, because the alternative would be going conventional. So on a conventional loan, typically your down payment is going to be more around like 5% down, could be higher. It might be 20% down in some cases. It just all depends on your personal credit and finances and situation. So everyone is a little bit different on there. So with the FHA loan, what also happens with it is when they come out to do that appraisal on the property, they're also doing what's called a FHA inspection. So they're doing the appraisal and they're doing the FHA inspection on there. So with the FHA inspection, the appraiser may ding a couple items on there that they want repaired in the home in order to approve the appraisal. So it's usually things like doing some scraping and painting. It could be update an electrical panel. And there's an electrical panel out there that's that's older, that's known to cause fires. And so if they see that specific brand, they are going to request that that's updated in there. They may say a handrail or whatever it is throughout the house. They want the house to be in a move-in condition. The reason why they put these kind of restrictions on there is because they know through FHA, those buyers that are coming in there, they probably had low down payment or have low credit score. So they don't want the buyers to get into a situation where they move into the house and then now they don't have enough money if a repair or something needs to be done to the house. So they want that house to be what they deem is move-in ready. So because of that, those repairs have to be completed by the owner. Now, I will say a lot of the items that I've seen come up, they're like tedious or just kind of annoying, like, okay, I gotta paint. But a lot of them are just normal maintenance, regular upkeep that should have been done to the house anyway, that they are just picking or showing or having you repair. So from a buyer standpoint, you are getting a house that is moved, that they have deemed moved and ready to go. You don't have to worry. And when I say ready to go, that doesn't mean like no other maintenance issues or anything that could come up, but per their guidelines, it is move-in ready for you to be there. So if you are the seller of this property and you have someone that wants to purchase your home and they have an FHA loan, people or agents may encourage you not to accept those FHA loans because of this inspection that also happens on the property. The alternative is a cash buyer coming along or going with the conventional loan product. So a conventional loan product, they have an appraisal, but they don't have that inspection piece of it. Now, I have seen where on a conventional where they will request something to be done, but not like on a FHA loan. So that's going to be the biggest difference. On the buyer side, I think that the FHA product is a great product for you. It helps a lot of people become homeowners who would, otherwise struggle with those larger down payments on a different type of loan. But as a seller, I mean, as a seller, I wouldn't turn anyone away with the FHA loan, but that's just kind of how I operate, of just being one to be open and fair to everyone that's in the market. If you're a seller, you want to pay attention to where that pre-approval came from. If it came from a little no-name mortgage broker, then I would be a little bit more skeptical because you don't know the type of due diligence they did to approve that buyer. But if it comes from a reputable bank, most reputable banks, at least all of the lenders that I know and I work with, they do the work up front. They collect all of the data that they need from that client up front, so that when they're issuing that pre-approval, they've already worked through their file. Now, could something come up? Yes, nothing is guaranteed. Something could come up down the line, but they have really worked that file. So if you're a buyer, the reason why you may be having hard time getting your offer accepted is because you have a seller who feels that their home may not pass the FHA inspection, and they don't want to be in a position where they have to make those repairs. And to be in all fairness, some owners just do not have the cash. They're really strapped for cash. They don't have it. They're not in a position to be able to make those repairs. So in a nutshell, that's what we're dealing with. If you are struggling or having a hard time getting your loan approved, this is the reason why. They're being instructed not to accept the FHA loan just because they're not in a position, or they don't want to deal with that inspection, and feeling like there may be some delays out there. So I hope this answered all of your questions. Thank you for joining me today. If you do have any questions, feel free to send me a message, or you could type them in the chat here now. I'm happy to answer those questions for you. This Wednesday at 2 p.m., I have CG Newman and Victoria Jeter. They're going to be joining me on here at 2 p.m. We are going to be talking about the home buying process, answering all of your questions. We're going live, getting you prepared to purchase your next home. So join us. That link is on the Brick House Realty page, so you can join us then. If you have any questions, again, reach out, and thanks for joining me, guys.